Hello everyone, George DeSantis here with the Look of the Market. It's really a shortened version because it's a Thursday around midday, I think, and it's October 22nd. And I thought there were a few things I wanted to bring to your attention. I think we should take note of them. So before we go further, we need to bring up the disclaimer as usual and just take a note that it's not an attempt to give any particular person investment advice, since I'm not a professional investment advisor. It's purely for educational purposes so that we can all learn something from it, perhaps. So let's begin. So we usually start with a weekly chart of the S&P, although sometimes we look at the monthly as well. But here's a weekly chart of the S&P 500. And what we can see here is a number of things. The 4 EMA is above the 9, and that is above the 30 weighted moving average, and that's above the 50. Parabolics below the most recent bar. The weekly chart, in other words, is still bullish, is still in an uptrend according to these indicators, parabolic, moving averages, etc. In addition to that, since Williams percentile with a 30 period crossed above here, way back on April 9, well, call it April 17, we've had Williams percentile above that magenta line, indicating that that trend is in effect, that uptrend. MACD histogram, we have two of them. This one we use for buy signals. This one we use for sell signals. You can see that this is still on a buy signal, and this one has not issued a sell signal as yet. So that's insofar as the weekly chart is concerned. Still a buy signal. Let's turn to the daily chart. Now on the daily chart, you recall that we saw an inverse head and shoulder pattern. Here's the head, here's the shoulder, here's the shoulder, left shoulder, right shoulder, and we drew a neckline here. And we've been looking at this neckline to see if we can hold at support there. On this day, we held support here. And since then, we've had some small bodied candlesticks or dojis. And currently, it's now what? It's now about 11:35 on Thursday. And we have what is called a dragonfly, is another doji type candlestick. And it seems as though this neckline is attempting to hold as support. Now the buy zone is between one of the buy zones anyway that I use is when price is between the 9 EMA, that red moving average here, and the 30 weighted moving average, and that's exactly where we are in the buy zone right now. Um, and what do we mean by that? Well, when the 9 crosses over the let's see where it did. When the 9 crosses over the 30, as it did right here on this right shoulder, um, the first pullback, the first close within the 9 and the 30 is a good buy signal. Okay, that's basically what it is. It seems as though we're going into a squeeze. We're not quite there yet. A squeeze on the Bollinger Bands, but we're not quite there yet. Another thing to notice on the daily chart is I've been plotting. It seems as though we've had, going all the way back, we've had a ten trading day cycle here. 10 days marks a bottom, 10 days a bottom, here, 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 etc. Here again at the head, here on the shoulder, and now again we have another 10-day cycle, end of cycle or beginning of the next cycle. So if this holds true, this 10-day cycle holds true, it's marking a bottom. Okay, so that's a bullish sign. Let's hope that we can find support here, the neckline. Now, if we go down to the other indicators, you see that Williams percentile is still above the magenta line here on the daily chart, as it crossed here, back here. That was on October 7, and it's remained above the magenta line. So it's bullish. Now, we did have a sell signal on the 1226.9 MACD, but according to Jerry Appel, who designed the MACD, the 1939.9 these parameters with this MACD histogram with these parameters is the more accurate sell signal. We don't have that yet. I mean, we're pretty close. We have a very short histogram bar here. But the fact is we don't have a sell signal on the histogram that we usually rely on for sell signals. So that's one way to interpret this chart. We're hoping to find, of course, support at the neckline. Now it seems as though we're shaping up as we speak to have somewhat of a hammer here to hammer out a bottom. So it looks as though the traders are rejecting this low here and pulling the price back up. All right, so let's take a look at something else. I thought I would take a look with you at the daily chart of the S&P using one of Jake Bernstein's charts. You know, that one that he plots the moving average of the 10-day moving average of the high and the 8-day moving average of the low. So you have the highs here and the lows here. And one of the ways that I understand he uses this is that when you have two complete bars above the 10-day moving average of the high, as you did here, right, and you have the accumulation distribution line above its 57-day average, this is the trigger, this is the setup. And of course, this led to a nice uptrend. Since then, we had this pullback, of course, with the head and shoulder pattern, as we saw and we discussed before. And now we are sitting at that neckline as we saw before. We have the 10-day cycle bar here, buy zone from the other indicator, from the other chart. But the important thing to notice here is that if we were getting a sell signal here from Jake's chart, we would have to have two complete bars below the 8-day average of the low, moving average of the low, and we would also have to have a trigger here where the accumulation distribution line drops below the 57-day average. Well, right now you can see that the accumulation distribution line today is ticking up above the average. We don't have two bars below the 8-day moving average of the lows. So Jake Bernstein's daily chart is seemingly lending some support to the idea that this neckline is likely to hold. And if that's the case, this return pattern here, it's called the return. If it holds, then we get a move up from here. Well, we'll see if that materializes. Okay. And here's a look at one of Jake's charts again, the one with the highs and lows. 10-day of the high, 10-day moving average of the high, the 8-day moving average of the low. It's called a channel. A moving average channel is the way he refers to it, okay? And he likes to buy at the low of the channel. Well, right now we have bars below the 8-day moving average of the low, but we don't have a complete bar. And this is on the Qs, okay, the NASDAQ. So we can take a look at the NASDAQ here, and we can see that we still don't have a complete bar below the 8-day moving average of the low. So there's no sell signal here. In addition to that, yes, we have the trigger below the 57-day moving average, but MACD has not issued a signal yet, and this is one that he uses. He does use MACD as well. So it seems as though, just as we saw in the S&P, we are seeing the idea that we might just hold at this neckline. Okay, now that's about it. I just wanted to bring these things to your attention. We'll see how it all develops by the end of the day and tomorrow too. So have a good weekend, and well, we'll talk to you on the weekend, but have a good day tomorrow, Friday, and we'll talk to you again. Bye-bye.